everyone. Thank you for joining us. My name is Joanne Collins, and I'm an analyst at Edison Investment Research. I'm joined today by Taeko Setaishi, who is lead advisor to Atlantis Japan Growth Trust. Taeko, hello.
Hello, Joanne.
Could you perhaps begin by outlining the Trust's investment objectives and the kind of companies that you want to invest in to achieve these objectives?
Thank you for the introduction, Joanne. The long-term objective is to achieve capital appreciation through investment in growth opportunities. We look for companies which are well managed with clear competitive advantages and high market shares in niche markets and which generate positive cash flow. We adopt a thematic approach rather than sector allocation. Current themes include environment, such as clean energy, DX, digitalization, digital transformation, and healthcare, and others.
During the financial year to the end of April 2021, Atlantis Japan Growth Trust has outperformed the benchmark quite substantially. The portfolio's returned 22.9% in NAV terms, 31.3% on a share price basis, compared to the benchmark return of 16.1%. However, the performance of the trust has varied across the financial year. It was very strong in the first half and more muted in the second half. What was the reason for the difference in the performance between the two halves of the year? And what stocks and sectors have been the main contributors and detractors to performance over the financial year?
In the first half, following the market slump in March 2020, growth stocks led the rebound. Then in the second half, market focus shifted to value stocks thanks to the very weak outlook for corporate earnings due to COVID-19 and fears of higher interest rates in the US. The performance of AJGF weakened in the second half as the fund was overweight in growth stocks as would be expected. Nevertheless, overall performance was strong. Main contributors, I have three examples. One, Celsius. This is healthcare theme. The idea was generated as a result of government reform in manufacturing regenerative medicine led by former Prime Minister Abe. Celsius has been profitable since the start, unlike most biotech companies. The current target is knee osteoarthritis, of which market is growing due to the aging population. Also, other target is breast reconstruction. And second example is a company called LaserTech. This is technology theme. LaserTech is a manufacturer of semiconductor testing equipment. High market share in growing markets, especially mask blank inspection systems, where the company has a 100% world market share. The company is a fabless manufacturer, which allows it to maintain the strength in new product development. The third company is called Renova. This is environment theme. Renova is an independent renewable energy generator using offshore wind power, biomass, and solar power. The government review of renewable energy rules and energy mix policy have stimulated growth in renewable energy. Renova is a well-managed company supported by good quality board members and good governance. And so this is 3 examples.
And what stocks have you been adding more recently to the portfolio, and what, if anything, have you sold to fund these purchases?
We made several additions. One example is a company called Shift. This is a DX theme, and Shift provides consulting and software testing services to verify the proper execution of computer programs. The company is expected to grow by over 40% per annum against the market growth of 20% per annum for software testing market. This is due to the following 3 points. 1, the outsourcing ratio of software testing is still very low. Second, the competition is still very limited. Third, the software market will continue to grow. And the second company's new addition is a company called GMO Financial Gate. This is another DX theme. It is a GMO Internet Group company, and the company is engaged in face-to-face cashless payments. It sells payment terminals and charges processing fees. Stores and restaurants usually have 7-8 different terminals to handle various cards. This can be replaced with a single GMO Financial Gate terminal. The potential market for cashless settlement is expanding. Diffusion ratio of cashless payment is still very low in Japan compared to the most of overseas countries. And EPS expected to grow by 20 to 30% per annum. And the third company is called Premium Group. The company provides automobile financing for used cars and warranties. The used automobile financing business is very mature. However, the company plans to grow by taking market share from other competitors and expanding the business, including offering warranties and other automobile-related businesses to support automobile garage and repair shops. Other 3 competitors are all consumer credit companies. These are all backed by the banks. Thus, their business is restricted to auto financing by banking law. The companies we sold off a company including Kobe Bussan. This is operating a nationwide franchise chain of supermarkets. And other companies called Creek and River, temporary staffing companies, mainly for the creative industries. And other companies called Fullcast Holdings. This is short-term temporary staffing service companies.
We've had 3 months of performance since the end of your financial year, May, June, and July. How has the portfolio performed since April?
3 months from May to July, AJGF declined by 1.27% against the TOPIX benchmark, which was down 0.6%. The fund underperformed the benchmark. The TOPIX value index continued to do better than TOPIX growth index. During this first quarter result season, many companies in the portfolio announced good or better than expected good results. However, these good figures have hardly had any impact on stock performances.
Let's move now to the economic and portfolio outlook. How are you seeing things ahead for the Japanese economy?
investment advisor feels the COVID pandemic could become worse before it improves. The government is now acting to speed up vaccinations, testing, and subsidies, which means more public spending. So, assuming the virus is contained, the economy will go through several stages before leveling off. Stage 1, reopening. Consumers will emerge from Japanese-style lockdowns, whether it is safe or not. Stage 2, revival. Pent-up demand kicks in, giving an extraordinary one-off boost to demand. Stage 3, private sector capital spending is injected into the economy. And stage 4, the economy settles in slow but steady recovery, a measured expansion with growth in the 1 to 2% range. Alpha given boost by overseas demand, such as autos. Given its demographics, Japan is unlikely to generate GDP growth much over 2% on a sustained base.
And what investment opportunities and risks do you expect to emerge from the scenario that you've outlined? And what do you expect that you'll be able to do to protect the portfolio from the risks ahead?
Given the above, Japan's investment requirements will undergo major changes in the coming months and years. One area of focus where Japan has already achieved success in terms of market share is medical equipment. For example, due to labor shortages, the population needs medical care robots more than 5G TV sets. The investment advisor expects to find more small growth companies benefiting from this trend. Japan does not lack the technology, design, and engineering expertise to compete successfully. However, to protect against overweighting one particular theme, we think it is prudent to have diversified portfolios of themes and stocks.
And what key message would you like to leave with our listeners today?
The AJGF investment approach has produced above average performance with a high tracking error. Japan has a very mature economy with an aging population. However, there are always investment opportunities. We believe the government will do everything to push up the economy higher. The investment advisor believes that corporate earnings will win out over the long term. Growing companies can be more proactive or motivated in improving their management, corporate earnings, profitabilities, R&D, rewarding shareholders, and even corporate governance. Although Japanese stock market is still very inefficient. Thus, investment advisor will continue to seek out companies which can produce sustainable earnings growth.
Thank you very much for your time, and thank you to all our listeners as well, and goodbye.
Thank you.